This video, I'm pretty much sure, is going to be the last video that you will ever need for you to be able to take high probability lower time frame entries using higher time frame perspectives. I've received tons of requests for me to make a video on how to precisely get a lower time frame confirmation entry, and this is what this video is all about. Now, if you miss any aspect of this video, it will simply show that you are really not prepared to become a better trader in this business. So you need to stick with me to the end of this video. Now, we are going to start from the higher time frame perspective. Your higher time frame could actually be the 15M or the 1H or the 4H, the daily time frame, the weekly time frame. Okay? It depends on the kind of trader that you are. So you need to make that choice for yourself. A lot of mentors out there, they teach multi-time frame analysis in a very obscure manner because they look at the weekly time frame, daily time frame, 4H, 1H, and so on and so forth. And that could be quite confusing to a beginner trader. Okay? So I am going to use only 2 time frames to be able to break down the market for you to see and how we move from the higher time frame to the lower time frame and get a confirmation entry. Please follow me step by step. Now, this is the 15M of XAUUSD. A lot of us like to trade gold. Okay? So pay attention now. Let's take out the market from maybe somewhere here to make it easier for us to understand what we are doing. First of all, for you to be able to trade the market successfully and become a better trader, you need to understand your structures. I've been emphasizing on the concept of structures and liquidity as the cornerstones of the market. And that's what we're going to do here now. So, first of all, where is our structures? Let's look at the most current structures here. For example, let's start from this high. Why do we think that this is a valid high? We need to determine that first of all. This high, is it a valid high or not? You ask yourself. Of course, it can only be a valid high if inducement has been taken. And as you can see here, if you look at what is happening here, let me show you what is happening here before I mark my inducement. Look, price printed this high and came back down, printed a higher high and pull back. Okay, and after that pullback, now price printed this and then pull back again before going higher. That's what you have in the market. So your inducement is actually here. I hope you understand that clearly. So quickly, we mark out that inducement right here. And as you can see, inducement was taken out. Okay? Now for your inducement to be valid, the candles that must take out that inducement must be down close candle in the case of this bullish structure, and it has to be 3 down close candles that close below each other. Okay? Simple. So that's our inducement to confirm this high. And then after then, price has to close above this structure high to confirm the low. And therefore, this is our valid structure low. If price comes back to this low to take it out and closes below it, that will become a change of character because right now we are bullish. Okay, so this will become our change of character. Now price has printed this high. For this high to be confirmed, it needs inducement, and here is the inducement in the market. So if price takes out this inducement, then our high can be confirmed. So with that being said, let's play price. Okay, so as you can see, inducement has been grabbed right there. Okay, now because inducement has been grabbed, we are now to mark our areas of interest. Remember that this is your last point of invalidation. If price comes to take out this point of invalidation and closes below it, that will become a chalk, a change of character. Okay, so now we have identified our low. For us to mark our areas of interest, we need to start from the low here. So where is our area of interest? Now, first of all, your area of interest should be the order flow. It is when all the order flows have been mitigated that you can now look for an OB within that order flow, which is always at the extreme of the order flow. Okay, so now look at the first order flow is here. If we mark this, it's already mitigated by this, as you can see. So we can not actually use that as an order flow. And now the next one that we have is this. Is this one. And as you can see, this has already been mitigated by this inducement here, this pullback here, which formed our inducement. So everything is mitigated here. So what do we do in this instance? Well, what we do is to look for a valid OB, and you must know the characteristics of a valid OB that you want to use. It has to take in liquidity and has to create a fair value gap. If it has no fair value gap, it's not valid. And so if you look at this, if you want to mark this as your OB being the last candle, okay, from this high, it is already mitigated. Okay, so we cannot use that as our OB. So let's move to the next order flow here. Look at this candle, guys. Look at this candle. This becomes a valid order block within this your order flow here. Okay, why is it a valid order block? Because it's taking a liquidity, and you need your order block to have a fair value gap. So if we mark it out, this candle, if we mark out this candle, look at it has a fair value gap, and this is what you need. The candle, this candle's low and this candle's high are not interacting, leaving this gap. So that's what you need, and therefore that becomes our area of interest. Now give a buffer to your area of interest when you are taking your trade. But at any rate, this is the higher time frame, which is the 15M. It doesn't really matter, because we are not going to take our trade from the 15M, that is the higher time frame. No, don't do that. If you want to do that, that means that you want to trade directly. That's called direct entry. But sometimes it can be a trap. Now that price has come into this our higher time frame area of interest, can we now move down to the 1M? Remember, it is the 15M we are using. So this is the 1M now. So what you want to do on the 1M is to have a chalk taken out. And let's see the chalk here. If price goes back from here, our change of character will be this. Simple. And after your change of character, what do you need again? You need inducement depending on the structures of the market within this zone here. So let's continue to advance price. Please follow me step by step. So as you can see, price has taken out this low. Now remember, all of this is one straight leg. This, look, I want you to understand something here. Take a look at this candle's high and the low of this candle. You can see that all these candles are inside bars. They are inside bars, they do not count. So your low is here, and therefore your chalk is still valid here. But if this low is taken out by another move, then our chalk will be transferred to this point. I hope you understand. So we continue to advance price. Okay, so as you can see, this low has been taken out. So it has created a new structure low here. So where is our chalk here? Our chalk can be transferred from here to this zone here. That becomes our chalk. As you can see again, let's move this backward so we can see what is going on. So our chalk is still okay where it is. Let's continue. Now, this low has been taken out again. So we have a new low in place. So our chart can be transferred from here to this zone. Now, if you go to the low higher time frame, because you may think that price has already taken out this area of interest, let's get back to the 15M for you to see that this area of interest is still valid. As you can see, it took it out with a candle wick. So it is still valid. If you find your area of interest on the higher time frame taken out by a candle wick, that area of interest is still valid. Okay? So let's go back to the 15M. I just wanted to show you that one. Let's get back to the 1M. So this is the 1M again. So you can see it is still valid. So we now have a new low with this chalk there. So let's continue. And now we have a new chalk in place. We can transfer this one from here to this. Now you may say it has closed again below. No, go back to the 15M and then you will see what I mean. Can you see? Let's play price and see. So can you see that it didn't close below? So let's get back to the 1M. So our inducement now, look at, this is the last low. Our inducement has been taken out. As you can see, inducement has been taken. So now that inducement has been taken, we need to wait for inducement. Think about it. Inducement was taken out here. Let me take price out from here so that it doesn't confuse you. This chalk was taken out here, but we need inducement. If you don't understand what we mean by inducement, let me show you what I mean by inducement. We are talking about price doing something like this, coming back to take out this low. Okay, that's what we mean by inducement. You need inducement before price will go higher. I hope you understand that. Okay, so let's continue. We want inducement. This is our inducement now. Let's see. This is our pullback. From this low, price pullback, okay, and created this new high. So if this inducement is taken out, we'll take our trade. Now let's continue to advance price. Okay, so you can see that that inducement has been taken out. So now that inducement has been taken out, where is your zone that you want to take this trade from? Well, the first one is this order flow here. If you mark this order flow, it's already mitigated by our inducement, so we cannot use that. Now, if you mark this higher order flow, it's already mitigated by this. So what do? We want to wait for, we want to take advantage of our OB, a valid OB for that matter. So the first one from the low here, we start from the low, is this one. That's our first order block that we want to take trade from. Now, why is that a valid OB? OB, yes. Let me take it out and show it to you. First of all, look at, it took inducement. Can you see that? It swept it. And after that inducement, price closed above. It has a fair value gap. Okay? That's why it is a high probability scenario in the market. So that's the first one. Now, this second one would have been also correct, but there is a little problem here. And what is the problem here? The problem here is that you need engineered liquidity before your area of interest. And where is the engineered liquidity? It's always before your area of interest. This is the engineered liquidity. So if price takes it out with a candle wick, we can enter our trade going long if it gives us a confirmation. Otherwise, price will tap into this. So let's continue to advance price and see what happens. This is where we want to take our trade from. Okay? So you can easily place your buy order here to go long if it taps. But first of all, let's play price. So as you can see, it closed below that engineered liquidity. It didn't wick. So we need to wait for it to tap into our area of interest. So boom, into the area of interest. Is it going to go our way? Well, we don't know yet. Let's see. Price is beginning to go our way. Let's just frame this trade. our TP. Now your TP will be according to your structure points. For example, here, let's frame it very well first. Our stop loss, give a buffer to your trade. Okay, give a buffer because price can do anything. So you need a buffer. Okay, so let's look at where we can place our TP. I hope you are following me carefully. Let's look at where we can place our TP. Well, our first TP could be here. And so that will be our first TP. Okay, and if that goes our way, it's going to give us massive profit. So it's going to give us about 5R, over 5R. So we can actually play price from there for us to see what the market will do. Price has hit our TP here. All right, this was where we marked as our TP, and it gave us 5RR. Now, after then, you can actually go to the 15M and see the exact point you would have taken your ultimate profit. Now, remember, this is our first TP. Our second TP will be here. This will be our second TP, and then our ultimate TP now will be this high. I don't want to add any position. I just want to show you direct how you can take this trade. First TP has been smashed, so let's use the 15M in this instance so that it can be faster. First TP has been smashed, so we continue. Second TP has been smashed, and boom, third TP has been smashed. Simple. Look at the sniper entry here. Look at the sniper entry here. Think about it, guys. This is so simple that you do not need to stress yourself. The reason why we are using the 15M and not the 4H or the daily time frame as a higher time frame is simply because we are trading from range to range. Okay, so we don't want to catch home run of 100 pips. I mean 1 to 100. We don't want to do that. We want to trade from range to range, and as you can see, this was actually our range high. So immediately price closes above this range high, then you will need to get back to your higher time frame to do the analysis breakdown again, all right, before you can take any trade. I hope you understand what we're talking about. So this is the simplest form of you to get a lower time frame entry confirmation using higher time frame perspective. Okay, now if you are new to our channel and you want to learn more of this type of trade breakdowns, please subscribe to our channel and turn on the notification so that anytime we upload a new video, you'll be notified about it. I see that a lot of you don't turn on the notification bell. Please do so that you don't miss out of any of our uploads. And if you want to learn more and become a professional trader, you want to join our VIP community, why not? The doors are open. I'm going to leave the link in the description. And if you haven't joined our free Telegram channel, please do so immediately because we are posting lots of high probability setups there. So you can take advantage of it to make money before joining our VIP community. Okay? Now, one more thing, guy. I have a sniper model. It's known as RALLYTOP sniper model, otherwise known as Holy Ghost entry strategy. We are going to launch it by September. Okay? We are going to start off by September. If you're interested to learn the Holy Ghost sniper entry strategy, then you can join us. When the time comes, I will remind you about it again. But for now, thank you for being part of our episode today. I see you in our next educational video.